Hello, everybody. This is Monday, August the 12th, 2024. And I am John Blank. I have a PhD from MIT in economics, and I'm the chief equity strategist and economist at Zacks Investment Research. I've been doing these videos for some time now with a team that is providing me some excellent research into various industry groups of interest to you as an investor, hopefully. And this particular one today is about conglomerates, a word that is abused a lot, but there is throughout history some of the most amazing groups of companies are conglomerates. And in truth, we really do need a video like this because we don't know about these groups, how they put together, how different they are, what groups they're in. There are all kinds of different types of businesses, from finance to insurance to infotech to industrials. Everything has the ability to be conglomerated. A lot of international companies here. Japanese trading houses in particular are conglomerates, and you will find them there, like Marubeni, Sumitomo, Hitachi. These types of names are in conglomerates. So great video today. Very, very interesting stuff, because what's happening here is management groups and holding companies are building out incredibly profitable enterprises across all of these conglomerates, and you can pick them out. You don't know these names. You don't know what they're doing with their businesses. That's the hidden secret sauce to this video. We're going to learn which ones are good. So, as we've always done, to keep it simple, we've got three parts here. Top stocks by market capitalization, top stocks by the maximum number of analysts, and the third part, of course, the largest 1 month percentage change in the current fiscal year, F1, earning per share estimates. That is the core element to the Zacks Rank. So, I like this strategy. I keep it simple. And of course, these are the disclosures today. These are just my views. They're not necessarily the views of Zacks Investment Research. Keep that in mind. You can read this the rest at your leisure. So let's always go to that first slide here, which is showing you first all the biggest stocks. You can see Danaher is the biggest, PDD and Honeywell, Hitachi, 3M, Grupo Mexico, all at the top, multi-billion-dollar companies. Danaher is the biggest industrial name, 194 billion in market capitalization. The smallest one here, National Presto, is down at 500 million. So keep in mind that just saying something is a conglomerate, you might think these are conglomerates, but they can be fairly small. Here's for specific. This is, I think, in insurance, and Vector Group is in tobacco. The Atlanta Braves, based out of Englewood, Colorado, of all places, A, B, and C holdings, those shares. So here's what you got to keep in mind. A conglomerate is just a corporation composed of several different independent businesses. So any entrepreneur, any family office can come together with several independent different businesses. One company owns a controlling stake in all the smaller companies, all of which conduct business separately and independently. That is the definition. So keep this in mind. There's several different independent businesses with a company with a controlling stake, typically called a holding company, in all these smaller companies. So you're going to see here Danaher's here. Danaher's here actually in the bottom level of the Zacks Rank, and Danaher's up here as one of the top stocks from coverage perspective. There's Vector Group here. Over here, we don't even see Vector Group. Here, I'm looking for it and I find it here. $2 billion market cap company. Oh, I'm sorry, but Vector Group's over here too. So we get Vector Group, and Vector Group. So in general, we're going to find out that surprisingly in this particular conglomerate sector, this and this and this are going to pull up by and large the same names. There'll be some differences, but not always. And this is fascinating. Always different to use one structure with three parts in these industry groups to show how they're organized differently. Again, come back here. Keep in mind this definition so you understand what you're using meaningfully as a conglomerate. Okay, top stocks by market capitalization. I'll start here. These are the big names. So here we got return on equity charts for the top 30 stocks by market capitalization. This will be chart one. Those are the big ones. There's Danaher, there's PDD, there's Honeywell, there's Hitachi, there's 3M, there's Sumitomo, there's Marubeni. So, of course, all the really big ones are those old Japanese holding companies from the 1980s that were built up and still around. Return on equity for these groups are not very high, I mean, other than 3M, which is just astonishing. PDD is fascinating. We'll get into this later, its definition, but it's based in Dublin, Ireland, but it's basically Chinese companies in Dublin, Ireland. So why is it in Dublin, Ireland? Well, you're looking at the answer here. It's making money and they don't want to pay taxes on that. It's a holding company. You can throw a holding company anywhere. So Chinese smaller businesses, obviously not very small, very profitable, and they domicile the holding company in Ireland. This one I pulled out for you here, CSL. You can see CSL has really come out nicely on a return on equity basis. I'm looking at almost a 32% return on equity, annual return on equity. So what is this? We're based in Scottsdale, Arizona, as a diversified global portfolio of innovative brands and business with highly engineered and high margin. So this is in a wide range of things: roofing, waterproofing, engineered products, and finishing equipment. So you've probably never heard of this group, but that shows you that this highly engineered high margin description is actually true. And they're doing well here. CSL. Griffin Corporation, ticker GFF. Look at this name. Just incredible. So you say to yourself, what on earth do these people do? Let's take a look. Griffin Corporation is a diversified management and holding company, wholly owned subsidiaries, like we said, oversees operations of these subsidiaries, allocating resources to them and managing their capital structures. They provide direction, assistance to the subs for growth opportunities. So it's reporting in these reportable segments, three of them: home and building products, telephonics, and cold plate plastics. So they are on the New York Stock Exchange. They're in these three different businesses, and they're basically just buying, selling, and managing all these businesses. But incredible job they're doing here. Never probably heard of them. Never probably heard of Carlyle companies. I probably did and have heard of 3M because, of course, over in chart one, those are the big market cap names. And the further down we get, of course, getting into names you're almost certainly not aware of, which, like I said, is why this slide deck and this particular talk is so valuable, because these are names you don't know. All right, PDD Holdings, right there it is, forward 12-month, just taking off. Let's talk about PDD. Commerce Group, multinational commerce group, based in Dublin, like I said. What does it do? It's in the digital economy, right? So that can benefit from increasing productivity in digital economy, basically in China, mainland China. And look at this thing out of the COVID pandemic, just incredible rising forward 12-month revenue growth. What can be said? Look at this chart and you got to say to yourself, I got to look into PDD. PDD, Pinduoduo Holdings. Reinvestment rate. Not a lot here, but it is more valuable in this particular context because this is what we talked about is a conglomerate structure. So the amount of reinvesting they're doing versus paying dividends is actually very relevant. And of course, you're going to see some of these names do more of it than others. Hitachi in particular is going to stick out. And we'll talk about Hitachi, but you're going to see that Hitachi amongst the Japanese conglomerates does a very good job. Okay, total debt. Down here, small company, FPAFY. A lot of debt being acquired by FPAFY. Do you ever heard of this company? Of course not. Let's look into it. First Pacific. Principal activities in consumer services, instant noodles, wheat flour, edible oils, baby food, snack foods, Teleco, mobile cable satellite, and then all the way down I got to this point. It's a $2 a share stock in August the 12th, and it's Hong Kong based. So it's a Hong Kong holding company. And that tells you why it's $2 a share, right? Because the Chinese have taken over Hong Kong and they're building up a lot of debt to do this. A lot of concern about this company. And yes, it's down here in the very small cap names, not the big ones. So again, 1, 2, 3, 4 in terms of the top stocks by market cap. These are the little ones. Here's a lot of debt. Probably never heard of this name, but again, now we're learning it's a holding company from Hong Kong. All right, depreciation and amortization is not worth spending time on. Let's get to the top stocks by maximum number of analysts. All right, this is a terrific, terrific setup. Look at all these nice estimate revisions here for ITT. Honeywell is fantastic. Markel Group, we'll talk about them. They're a reinsurance, specialty insurance group that's doing extremely well. There's 3M. A lot of issues here, actually. You can see Federal Signal up. They're based out of Illinois. Fantastic chart. This one, you really wish you would own this chart and this stock over the last 3 years. They did a fantastic job. And Bunzl, I singled it out. Look at this. Nice thing. And that doesn't look like earnings are getting totally captured in the share price, definitely heading north, but not like the earnings. So let's look into Bunzl, the UK company with 2 business areas, outsourcing and Filtrona. So what they do is they form partnerships with both their suppliers and customers, and they're in light manufacturing, plastic and paper-based products. Probably never heard of Bunzl. But again, out of the consumer economy, convenience economy, in the last 2-3 years, they've done extremely well. There's Griffin Industries. Market cap at 2.8 billion. Probably never heard of them. Oh, look at that chart. Beautiful. So, I mean, ITT, beautiful chart. Honeywell, beautiful chart. Here you've got Federal Signal, awesome, and Griffin Industries. And BAZLFY, which is now you've learned is Bunzl PLC. Great stuff. Like I said, great stuff to learn some things and see what actually is working out there. So Sal, now you understand if someone understands how to run a lot of different businesses from a holding perspective, conglomerates may not be a bad, dirty word. All right, net margin. Here we go. So who is building net margin creatively over time over the last 20 years? Let's talk about this Markel Group. They're old. 1930, they're headquartered right out of Virginia, right out of DC. And they market underwrites specialty insurance products in the US, UK, Canada, and international. Of course, that must mean not those 3, but everywhere else. It's a holding company, like we're talking about, specialty insurance at its core. So it has 4 reportable segments: insurance, reinsurance, investing, and market ventures. Basically, an insurance, specialty insurance company, and they really know their business. Markel Group, this is really a nice chart from learning how to run a business and incrementally adding value to it through your management activities. Can't say enough about that. Very, very cool chart to look at. Return on capital down here, Vector Group. Done an incredible job here, you can see. 32% return on capital. Let's look into them. Okay, this is Liggett Group. This is basically a tobacco company based in Miami. So maybe you don't like tobacco companies, don't want to bother with it, but of course they do make money, make a ton of money. Ticker VGR. 3M, of course, doing well on a return on capital basis of late. And you can see in general, there's Griffin, there's CSL. We've got a lot of names that are coming out of this cycle and cycling up in profitability. So again, also from an economist perspective, very hard to look at the top mega cap names here, most held names, and see them all turning up and say, oh, things are poor. I couldn't disagree more with you on that, if you think that. On to the next, total debt to capital. Again, we're just looking at people building businesses using debt. That's Griffin Industries clearly doing it. Not as important for us, but an interesting chart. Back to the final one. Of course, the largest 1-month percent change in current fiscal year earnings estimates. That would be 2024 for us, even though we're in August. So what do we have here? Hitachi EBIT chart. Hitachi, of course, they're in Tokyo, and they manufacture and market a wide range of products: computers, semiconductors, consumer products, power, and industrial equipment. Fantastic company doing well. Look at PDD and that Ireland Dublin thing with Chinese digital economy. So incredible story out of the COVID pandemic. Just an amazing thing. You got to wonder why people are just separating the wheat from the chaff in these Chinese companies. Obviously, they're based in Dublin for a reason. They're making a ton of money. Hitachi, again, maybe we want that over Sumitomo and Marubeni. Of course we do. They have a much stronger looking business model here. Cash flow yield. Here's another one. Star Equity Holdings, STRR. Jumps out of our third chart. Of course, this is a little smaller number of names, but let's look into them. Based in Suwanee, Georgia, diversified holding companies, healthcare, building and construction, real estate. Obviously, I'm sure that's all kind of tied in together in some way if we looked into it further. But doing a great job with it, right? Got a cash flow yields the last 2 years doing real well. It had some issues coming out of the pandemic. I assume they've come together on that. There's a lot of volatility here, you can see. But generally, right now, they're doing really well. So again, a lot of names, a lot of interesting stuff that you probably don't know. So price to free cash flow yield is a valuation thing. I just want to circle that really the charts aren't of great interest, but the rankings of these groups from the very most important ones down all the way through to the less important ones. Keep this in mind. This is on first percent change. So you're going to see Danaher down because it's just not changing its estimate in versions much. Enterprise value to sales. It's fascinating to look at price to free cash flow versus enterprise value to sales. This is clearly a better chart from a meaningfulness perspective. And you can really pull out companies that are driving forward. Here's Danaher's enterprise value to sales. How the stock is really performing fundamentally accurately with itself. Like to see that. Federal Signal, another one of those names that you just killed it if you watch this chart right. You certainly don't want to buy any stock that's not doing well in a trend performance perspective on enterprise value to sales. So here's a big word of a term, but you can see it really delivers from this chart to this chart. There's no comparison. This is a far better looking chart. All right, finally, just finish up with 4 key charts. These are by all the conglomerates and all the different industry conglomerates. So this is actually showing the cycle on all the different interesting variables. And you can learn a ton here. Cannot say enough about just spending some time here. Here's the PEG ratio, for example, of these stocks. And this is probably the most important one of all. So don't think this is the conglomerate PEG ratio for this stock. So look now, it's going down to 0.6 from 3. And you got a buying opportunity here. This is screaming buying opportunity. Amazing story. Over here, we've got enterprise value to free cash flow, like we've talked. Same thing. Screaming stories here. So that's why I have said today this is a great discussion. You certainly don't know these names in the sector. You've probably been scared away because you don't know them and don't know what's going on here. But there really is some great investing opportunities here. If you don't think so, and I think I'm just using words here, look again at this PEG ratio. Look again at that valuation. That's what I'm talking about. From an investing perspective, this is a great presentation to go through again and again. So thanks for attending. I hope you enjoyed this. Really an interesting subject. And here's where you can get all this stuff. Call us up, 866-794-6065. Easier to do just an email, strategycall@zackspro.com, or find us on the web, www.zackspro.com. Here's your 4 or 3 key places, 866-794-6065. And an email, strategycall@zackspro.com, or just find us on the web. We also do have a LinkedIn and Twitter feed if you care to follow us there. But like I said, this particular discussion is so interesting to get these slides and learn this stuff and work through this thing. So I highly recommend you do that. That's it for me. I hope you enjoyed it.